Welcome back. We will be looking at the final major segment in chapter number 9, divisional performance measurement and management, and that is transfer pricing. Now, transfer pricing is getting discussed in the context of divisions trading with each other in the same company. So, these are two divisions. Let's say, for example, Coca Cola is the company, you have the beverages, the drink manufacturing division, and the can manufacturing division. So the can manufacturer maybe produces the can, manufactures the can, and then transfers the can or sells the can to the beverages division. The beverages division will be filling it, and or you can have a separate like canning or packaging division. So you have the can production team, beverages production team, and the packaging division. So the packaging division buys the can, let's just say, buys the cans, buys the beverages, puts it into the can, and sells it. Right? This sort of situation. So there's trade and exchange that is happening within the division. So this is where transfer pricing becomes important, because the definition of the transfer price is the price at which the good or service in between the divisions are being transferred at. So overall as a company, it doesn't have an impact for the company because there's no trading outside. This is internal. So it doesn't really have a major impact or any impact at all of the company's profit and loss statement or the company's performance. It will have an impact on the divisional performance, right? For each division, right? Depending on what price the sale or the transfer happens at, the divisional income statements, the divisional profit and loss statements will get affected. This is why transfer pricing is a sensitive area, because if divisional managers feel that the transfer price that is being used is actually unfair for them and it is affecting their P&L figures and their ROI, RI, EVA figures, then they will respond negatively to that trend. So if you look at what kind of objectives you have with the transfer price, we have these objectives. A good transfer price should result in goal congruence. It should be fair for each division. It should maintain divisional autonomy. It should aid bookkeeping in the recording of the internal transfers, obviously. And it generally allows us to legally minimize the global tax liability of the organization, which is called international transfer pricing. So, if you this is a good transfer price, a fair transfer price. Now, a few things about the transfer price itself that we have to understand. And that is what we will be looking at in the next segment. Good luck and thank you.